accounting class. In the previous session, we dealt with a few problems. So today also we'll be talking about some problems. And today we'll be dealing with the pro rata allotment. So remember, a pro rata allotment is when there is an oversubscription of shares. And in these situations, the company may opt for, rejecting some shares, accepting some shares. Okay, it may decide to accept the amount of shares that they've issued and then reject the balance, or they may decide to go for pro rata allotment, which is proportionate allotment of shares, meaning out of one share, let's say, okay, out of one share, two or three shareholders may share one share. Okay, two or three shareholders may be the owners of one share. That is termed as proportionate allotment or pro rata allotment of shares. Okay, they'll be holding a certain proportionate rate of the total shares. Okay, so you'll be able to understand it more clearly when we're solving a problem. So we have a very comprehensive problem here. J Limited invited applications for 1 lakh equity shares of rupees 25 each, payable as under. On application, rupees 5 per share. On allotment, rupees 7.5 per share. On first call, which is due after 2 months after allotment, it is rupees 7.50 per share. And on the second and final call, which is due 2 months after the first call, we have rupees 5 per share. Now, applications were received for 4 lakh shares on January 1st, 2016, and allotment was made on February 1st, 2016. Record journal entries in the books of the company to record these share capital transactions under each of the following circumstances. First situation, the directors decide to allot 1 lakh shares in full to selected applications, and the applications for the remaining 3 lakh shares were rejected outright. Okay, this is your first situation where you have some shares which are allotted and some shares which are rejected. And then you have the second situation. The directors decided to make a pro rata allotment of 25% of the shares applied for to every applicant, to apply the balance of application money towards amount due on allotment, and to refund the amount remaining thereafter. So we'll explain this when we're solving the problem. And then you have case number 3. The directors totally reject applications for 2 lakh shares, accept full applications for 80,000 shares, and make pro rata allotment of the 20,000 shares to remaining applicants. The excess of application money is to be adjusted towards allotment and calls to be made. Okay, so this is a lengthy problem, but at the same time, it'll be quite simple. More or less, the journal entries are the journal entries usually for application will be different, okay, because you have to decide upon how to allocate this particular amount. Okay, so let's solve this problem then. Now the next question, this one, it is on pro rata allotment of shares. So J Limited, we have already looked at the question. Now let's analyze the question first. If you look at the question properly, they've given that J Limited invited applications only for 1 lakh equity shares. Okay, so for 1 lakh equity shares is how many shares have been issued at the rate of rupees 25 each, and they've given rupees 5 on application, rupees 7.50 on allotment, rupees 7.50 on first call, and rupees 5 on the second and final call, and they've given the duration after which these 2 calls are to be made. Okay. And then additionally, they've said applications were received for 4 lakh shares on 1st of January 2016, and allotment was made on 1st of February 2016. So you've received 4 lakh shares, which means there is an oversubscription of shares, correct? If there are more shares that are subscribed than the ones that have been issued, then it's known as oversubscription of shares to the extent of 3 lakh shares in this regards. Okay, so in the question, they've told us to record journal entries based upon 3 cases or 3 situations. So in the first situation, the directors have decided to allot 1 lakh in full and reject the remaining 3 lakh shares. Okay, so 1 lakh will be given shares, remaining 3 lakhs will not be given shares. And then additionally, they've also said case B, wherein there is a pro rata allotment. So you've already heard of pro rata allotment. Pro rata allotment is nothing more than proportionate allotment of shares. Okay, so proportionate allotment of shares is referred to as pro rata allotment. And according to this, 25% of the shares applied for to every applicant. That means every person will get, so let's say one person has applied for 1 share. Out of 1 share, this person will be getting only 25% of that entire share, which is 0.25 of that share. So in other words, if let's say a person has applied for 100 shares, then that means that person will get only 25 shares in the company. Okay, so 25% they'll be getting. And they've said that the money that is available, right? So out of 100 shares, 25 you're receiving, there is still money available on 75 shares. Now this money, balance money, will be used towards allotment. So on application, it will be this much. On allotment, will be this much, and any excess that is there after using this amount, all the excess that is there will be refunded. That is case number 2. And then case or circumstance number 3 is where they're saying the directors will reject 2 lakh shares and they will accept 80,000 shares. Okay, so there were 4 lakh shares in total. Out of these 4 lakh shares, they're going to be rejecting 2 lakh shares. Correct? Now we have a balance of 2 lakh shares. And out of 2 lakh shares, 80,000 will be accepted in full. That means we have a balance of 1,20,000 shares, which will go for pro rata allotment. So 20,000 shares are available for 1,20,000 shares. Okay, these 1,20,000 will not be given in full. Rather, they'll get a proportion which is 20,000 shares only that is available. Okay, so they've told us to prepare journal entries for with regards to this. So let's start with the preparation of the journal entries. So in the books of J Limited, date, particulars, debit, credit column. Okay, the journal entries that we're having. So the first entry is as usual when you're receiving the application money. So let's first receive the application money. Applications were received for 4 lakh shares on 1st of January 2016. So in the date column, 2016, January 1st. When we're receiving, we'll be getting money first. So bank account debited to equity shares. So to equity share capital account, again write in full, and narration. So for this, we're receiving applications on 4 lakh shares at the rate of rupees 5 each. Okay, so 4 lakh shares at the rate of rupees 5 each, amounting to rupees 20 lakhs. Okay, so now we've received the money. We have to transfer it to our share equity share application account. We have to transfer it to our share capital account. So on the same date, equity share application account debited to equity share capital account, that we have to transfer. Now in the equity share application account, we had rupees 20 lakhs, right? So rupees 20 lakhs. Now this rupees 20 lakhs, as per this is case A. Okay, I forgot to write this. Just write somewhere at the top before you begin, case A. So case A, they're saying they're going to allot 1 lakh in full and reject 3 lakh shares. So if you're rejecting, that means money is going to be flowing out. So if money is flowing out, then it will be to bank account, right? Out of equity share application account, some money is going to be going back to the subscribers. So it will be to bank account, which is your 3 lakh shares at the rate of rupees 5 each. And in case of equity share capital, it will be 1 lakh shares, again at the rate of rupees 5 each. Okay, so we'll be having here 5 lakhs and 15 lakhs respectively. So write the narration as well, being transfer of application money to equity share capital account on 1 lakh shares and balance refunded on rejected applications. You can write something like that. Okay, now for the rest, which is your share allotment, share first call, share second call, they follow the same procedure as we've always done, right? The journal entries are very simple. Firstly, you will be making the due entry for share allotment, and then you'll receive the share allotment. Remember the date, allotment was made on February 1st, 2016, right? So the date has also been given. So in the date column, write the date and then proceed with share allotment. Then after 2 months, it'll be share first call, and 2 months after share allotment, after share first call will be your share final call. Okay, so please proceed. Make sure you're continuing case A by writing the remaining journal entries as well. Okay, so I'll move ahead now and we'll talk about case B. So the next situation is case B. So again, we'll start with application. So as on 2016, January 1st, We'll start with share application, which is the same entry. Bank account debited to equity share application account. Same amount of money, rupees 20 lakhs. This entry will basically remain the same for all three cases. Okay, now that we've received the money, the difference amongst all of this will arise when we are distributing the money. Okay, when the pro rata allotment comes into the picture. So on the same date, equity share application account debited rupees 20,000 to equity share capital account. This will be amounting to rupees 5 lakhs only. Okay, why? Because 1 lakh at the rate of 5, so it will be rupees 5 lakhs. Okay, now let's come to this case here. Case B says pro rata allotment of 25% of the shares applied for to every applicant. Balance application money used for allotment and excess amount is going to be refunded. So now we have to calculate how much we are supposed to transfer to the share allotment account. Therefore, the next entry will be equity share application. Out of this, one amount we have to transfer to share capital. Another amount will be transferred to equity share allotment account. Okay, so firstly we have to check how much is the total amount for equity share allotments. In case of equity share allotment, it will be 1 lakh shares at the rate of 7.50. So 1 lakh at the rate of 7.5 should give us rupees 7 lakhs 50,000. Now out of this 20 lakhs, we still have 15 lakhs. That means we have enough to transfer to our equity share allotment account. So out of this 20 lakhs, we can still transfer 7 lakhs 50,000 to our equity share allotment account. Okay, so once again, the saying that there is a pro rata allotment and part of the money which we received on application, we should transfer it to equity share allotment, and balance that is available after the transfer to allotment should be refunded to the applicants. Which means, firstly, equity share application account debited, total amount received 20 lakhs. Out of this 20 lakhs, how much exactly is due for share application? It is 5 lakhs only, right? 1 lakh shares at the rate of rupees 5 each. So 5 lakhs. Now they're saying whatever money out of this 20 lakhs, 15 lakhs is remaining, correct? Now out of 15 lakhs, do we have enough or not to transfer to our share allotment account? So we have to check. 1 lakh shares at the rate of 7.50 gives us rupees 7 lakh 50,000, which is enough, right? We have 15 lakhs. Out of 15 lakhs, 7 lakh 50,000, we have enough. So that amount will be transferred to equity share allotment account and balance will be transferred to bank account because it has to be refunded to your applicants. So whatever is your balance, which is 7 lakhs 50,000, will be given back to the shareholders. Okay, I hope this journal entry is clear. It's relatively simple once you understand how to go about it. Okay, so let's write the narration for this being transfer of application money. Transfer of application money on shares allotted to share capital. On shares allotted to share capital. And then you have excess application money or excess application amount credited to allotment account and balance refunded being transfer of application money on shares allotted to share capital, excess application amount credited to allotment account, and balance is refunded. Okay, so share application, these are your two entries. And now, because there is an entry here that affects share allotment account, so I will also prepare the share allotment account for us. Okay, so now for the entry of share allotment, we have to make a due entry. Okay, so the due entry will be, generally we'll be making your equity share allotment account debited to equity share capital account, right? That is your general due entry. So it'll be equity share allotment account debited to equity share capital account amounting to rupees 7,50,000, which we've already calculated previously. Okay, now one thing to keep in mind is that here you will see we've already received rupees 7,50,000, which is the total amount that we're needing. So therefore this entry, we will not call it as our due entry, but rather we'll just call it as a transferring entry, the thing that we normally do, right? When we receive share application money and then we just transfer it to equity share capital. This is that entry itself. Okay, so this entry will be, your narration you can write being transfer of share allotment amount to share capital. Okay, so again, because we've already received the money, we don't have to make it due, or we don't have to call for it anymore. We don't have to receive for it either because we've already received it. So this entry will be the transferring entry, transferring the money we've received on share allotment to our share capital account. Okay, so I hope this is clear, and this is case B. Besides that, you can proceed with the preparation of the other entries on your first call as well as on your second call. So make sure you're writing the date. Okay, so for this, I almost forgot the date. Date on allotment is, where was it? Oh, here. Date on allotment was 1st of February 2016. So we can write it here, 2016, February 1st. Okay. So this is the entry for, these are the journal entries for case B. Now let's move ahead to case C. In case of case or third situation, you have rejected some shares, you have accepted some shares, and there's a pro rata allotment of some shares. So basically, it's a combination of these two. First, you're rejecting. Here, there's a pro rata allotment, and also here you're accepting as well some, right? So it's a combination of cases A and B. Okay, so in case of case C, 1st of January 2016, date column. So the first entry will remain the same, of course, because we're just receiving money. So bank account debited to equity share application account, right? So it will be bank account debited to equity share application account amounting to rupees 20 lakhs. Okay, same entry, same narration. Right, so the next situation is transferring this money, equity share application account debited, you have an amount of rupees 20 lakhs to equity share capital account. This should amount to rupees 5 lakhs. And then you also have to equity share allotment account. Okay, so before we proceed to this, let's prepare a small working note with this regards. Okay, so we have to calculate how much exactly is going to allotment, how much is going to our first call, second call, and so on. All right, so firstly, we have to calculate how much excess money we're having. So total application money, this will be your working note, okay? This will be your working note. So total money received on application, or total application money, total money received on application is equal to rupees 20 lakhs less amount of for allotment. So less, we can say transferred to share capital rupees 5 lakhs. So this is excess application money. It is rupees 15 lakhs. Okay. Now out of this rupees 15 lakhs, we have to transfer some amount to share allotment, some amount to share calls, and if there's any balance as such that is remaining, it should be repaid or should be refunded. Okay, so in this situation, firstly, less transfers, or you can call it as adjustment or adjustments. Okay, so first adjustment or first transfer from this money will go to share allotment, and any extra money will go to share calls. Now I'm combining your first call and second call. Okay, and when I'm writing share calls, I'm combining 7.50 and 5 rupees, both your first and your second call. Okay, so let's come here. Now here, see, you've rejected 2 lakh shares. Okay, so the entire 2 lakh will be affected in your bank account. Okay, this entire 2 lakh is going to be affected in your bank account. And then besides that, here you also have accepted 80,000 shares in full. So this will go directly to your share capital account. Now, pro rata allotment for 20,000 shares. As you've said, 20,000 shares are still available, but you have applications for 1,20,000 shares. Okay, so you can only issue, you can only receive any money on your first call, on your second call, in your allotment, you can receive only on 20,000 shares. So therefore, on share allotment, the money that we can take from application towards share allotment will be only on 20,000 shares. Similarly, in case of share call also, you have pro rata allotment of only 20,000 shares, right? So application money you can take out of this excess only for 20,000 shares. Now share allotment rate is rupees 7.50, and in case of share calls, we are having a rate of rupees 7.50 plus 5. Okay, remember, first call and second call, I've taken them together. All right, so share allotment 20,000 shares at the rate of rupees 7.50 should amount to rupees 1,50,000, and 20,000 shares at the rate of 12.50 should amount to rupees 2,50,000. So the total amount of money that is transferred from 15 lakhs to the to your share allotment and share call is rupees 4 lakhs. Now whatever is the balance that is left over, rupees 11 lakhs will be refunded. Okay, amount to be refunded. This amount, okay, this rupees 11 lakhs also includes this amount that we've rejected, 2 lakh shares. Okay, it doesn't just include this remaining 1 lakh shares that we have distributed, 1,20,000 shares for which we've given pro rata allotment, but it also includes rupees 2 lakh shares. The amount on 2 lakh shares. Okay, so now we can carry forward with our journal entries. Okay, so please make sure you're clear with the working note first before you're moving on, before you proceed to the journal entry for this particular sum. Okay, so equity share application account, out of this 20 lakhs, we are going to transfer some amount, rupees 5 lakhs, transfer to share capital 5 lakhs. And then you also have an amount which you're transferring, right? Transfer to share allotment account. So we can write that to share allotment account, rupees 1,50,000. So write that down, rupees 1,50,000. You also have a transfer to share calls. So to equity share calls account amounting to rupees 2,50,000, and balance is going to be refunded, rupees 11 lakhs to bank account, rupees 11 lakhs. All right, so this is the amount that should be transferred out of equity share application account. So narration, you can just write simply being share application money transferred to share capital, to share allotment, to share calls, and balance rejected. You can just write it simply just like that also. Okay, so moving on, this was your share application, then your share allotment. In case of share allotment, it is on 2016 February 1st. So on 1st of February, we make our due entry first for share allotment. So due entry will be equity share allotment account debited to equity share capital account. So for the due entry, you have 1 lakh shares at the rate of rupees 7.50. So it should have been rupees 7,50,000 in the amounts column. Now let's receive the money, same date, bank account, debited to equity share allotment account. Okay, so 7,50,000 is how much is due, but in the previous journal entry, see, you've already received rupees 1,50,000, right? You already have cash in hand worth rupees 1,50,000 for your share allotment. So now you can only receive 7,50,000 minus 1,50,000, rupees 6 lakhs in total. This is how much we're going to be receiving after the adjusting the amount received on share application. Okay, so 2 months later, first call due 2 months after allotments, February, March, April, in the month of April. So as on April 1st, we have to make the due entry for our first call. So equity share first call account debited to equity share capital account 1 lakh shares at the rate of rupees 7.50 again. 7.50 amounting to rupees 7,50,000. Okay, now receiving the money, bank account debited to equity share first call account. So how much are we going to be receiving? Remember, we have received on share calls 2,50,000, which includes your first call and your second call. So this particular amount of rupees 2,50,000, you could have divided it here also to make it easier for you. It would have been 20,000 at the rate of rupees 7.50 first call, and on second call it would have been 20,000 at the rate of rupees 5. Quite simple, right? So 20,000 at the rate of 7.50 will be rupees 1,50,000. So out of 7,50,000, we have already received 1,50,000, which is your calls in advance. Okay, it'll be your calls in advance. You can write it, you can avoid writing it, but I guess it will be better to write it, so I'll just write it here. Calls in advance account debited. So calls in advance which we have received on your share application. Okay, the amount we've received on share application, so it'll be rupees 1,50,000. Bank account, okay, leave the bank account, we'll calculate the balancing figure. Equity share first call 7,50,000, and balancing figure is how much you're receiving on your first call. Okay, all right. So after the first call, now let's make the second call. In case of final call, again they're saying due 2 months after the first call, so on June 1st. Just the same way, we'll first make the due entry, equity share second and final call account debited to equity share capital account, which is 1 lakh shares at the rate of rupees 5 each, amounting to rupees 5 lakhs in total. Okay, we've made the due entry. Now let's receive the money. It will be bank account debited to equity share second and final call account. Second and final call account, rupees 5 lakhs. Again, we've received money already on your second call. If you remember, we received it from the application. Second call, 20,000 at the rate of rupees 5 each, which amounts to rupees 1 lakh. So this rupees 1 lakh is our calls in advance, the amount already received, and the balancing figure, which is rupees 4 lakhs, is what we're going to be receiving in cash. Okay, so it'll be calls in advance account debited rupees 1 lakh, bank account debited rupees 4 lakhs to equity share second and final call account, amounting to rupees 5 lakhs. Okay, so this is the solution to this problem. Remember, here we have 3 cases. The first case is when you're completely accepting the exact amount and rejecting whatever is in excess. And the second situation is where you have a total pro rata allotment. And the third situation is where you're accepting some, rejecting some, and you have a pro rata allotment of some. So generally what companies do is they try to follow the third situation, the third case, where they accept, reject, and pro rata allotment. However, there are also situations where they only follow the pro rata allotment as well. Okay, so these the pro rata allotment is the one you have to keep an eye on. You have to study this area properly. So of course, I'll be solving more questions with regards to pro rata allotment to make it, to understand the concept better, even though you may have already learned about it, but for a deeper understanding of the topic. Okay.